traders, Gary Wagner here, approximately 10:50 a.m. in Honolulu, Hawaii. It is Tuesday, the 27th day of September, and this is the Daily Report for Gold. We have gold trading higher this morning, currently trading at about $16.50 per ounce. That is the spot market, and in the December COMEX contract, it's trading at $15.52. Now, that puts it up about $22, $23 on the day. It has been much higher. It has been as high as $16.80 before finding resistance and backing down a little bit. Of course, we did put out a recommendation yesterday. That recommendation was to enter the market from the long side, place a price order in at $16.20. Traders, we have initially put our stops at $15.80. And the reason for placing them at $15.80 was that that is a point where we have some very, very strong support, and that was the initial area that we wanted to put it in. At this point, though, I do want to move our stops up to protect at least our original equity and a small amount of profits if this market wants to continue higher. Then, of course, we're going to remain in it. My upside target is roughly $16.80 to $17.00. We touched the $16.80 once and it came back down, but in terms of different areas that we find support and resistance, this is that $16.81 right in here, and so that is going to be a pretty important number. As you can see, it did touch it and it did come back down. That's the 38% level. Looking at that, this is the 61% level. This is that $15.39. So these are really broad strokes. We are looking at a weekly chart. It isn't candlestick format, but I'm using this right now to look at the different upside targets. This is at $16.80. The next one really is $17.08. Then $17.44.42, and this is where we have a Fibonacci harmonic. So my belief is that should this market continue to move higher, and I believe that there's a strong opportunity for this market to do that, the points that I'm looking at are going to be as follows: $16.80, $17.08, and $17.42. Those are my different price targets for exiting this first trade. So traders, where does it actually make sense to move the stop up? Here's the key. Right now, we have such extreme volatility in the market. This market can do any kind of a swing and make no rhyme or reason. We entered in at $16.20. That's this area right here, as you can see. And then our initial stop, of course, is at $15.80, which puts it well below these lows right in here. And my recommendation right now is to move that stop up. The only place that makes sense is going to be underneath these particular lows right in here and here. So somewhere around $16.30, $16.35 would be my recommendation in terms of trailing your stop up. In other words, I want to be able to catch this for the longer term move, but I certainly do not want to watch it whip around, hit a certain part, be unable to break through, and then pull no profits whatsoever on this trade. That will not be acceptable to me. So go ahead, move your protective stop up to between $16.35 and $16.38. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.